Hi guys, welcome. In this video, I will be discussing pound JPY and the winner that I've just had and how I am still running this trade for two long-term positions. So if you want to know how I'm holding this trade and how I just exited a really great quick trade that hit profit within 3 days, go ahead and stick around. Hey guys, what's going on? It's Shaquan from SLFX Trading, and I am here to break down pound JPY to you. Now, the trades that I'm going to be discussing is just based on personally how I trade. And I know that everyone trades differently, but I am here to tell you guys that I am a swing trader and I love holding my trades. That's what I do. That's my thing. This is what I teach. And the reason why I like holding trades is because it just gives me time to breathe. It gives me time to think. I'm not having to show up every single day to place a trade. I just let my trades run every single day for me so that I can cash flow. And if I decide I don't want to trade on a particular day, I still have money working in my favor. And if that's something that you're interested in, stick around while I discuss how I took these positions. Now, looking at this particular currency pair, we're just going to scale a little bit over to the left, okay? So I took a long-term position only because if you just look here, this small range, this small piece, if you look at what's going on, you got to pay attention to your exchange rates. I talk a lot about exchange rates. So here, and then here. There was something significant that was going on in this area, and the significance part is that when you're looking at this currency pair, what you'll see is your exchange rates are getting higher first. So we're going from 135.781 to 129.341 to 139.738 to 131.777. And do you see what's actually going on? If you don't know, well, what's going on is the exchange rates are going higher. And I'm like, what? Let me go ahead and jump in on this buy side, because if my exchange rates are going higher, there's a demand for pound over the yen. And if that's the case, I'm about the pound, right? And when we're buying and selling, that's what we're saying. The value of the pound is higher than the yen. So we're going to buy the pound as long as the exchange rates keep going up. And as you can see, they're still going up. So I've taken a long-term position. I'm just going to pull out my handy dandy fib really quick. So my first position, my first execution was down here after the close of this candle here. That was my first position. And I said, you know what? I'm just going to ride this out. I'm just going to ride it out, and I'm just going to trade back up to my 0 and my negative 27, right? Because the exchange rates are pushing up. I know that if price wanted to go somewhere, the first point of contact is going to be back up to the previous high. But if I'm saying that these two exchange rates keep going up, maybe this exchange rate can be taken out. And if that's the case, I am going to be the buyer past that exchange rate. So that's where my negative 27 comes in at. So that's done, right? Now, holding that position. But then this is where I've learned and I teach, when you're in a long-term position, you're building equity. And if you don't know what equity means, equity just basically means that as your position is open, you're going to see your profits go up and down. And that is where, if you look at your journal, right, your MetaTrader or whatever that you're using, you have something that's called balance and then something that's called equity. Balance is what your account is once your trades are completed plus your invested amount, right? So let's say you're starting with a $1,000 account. So when you're in no positions and you're just starting an account, let's say it's $1,000, you have $1,000 and then your equity is at $1,000 because you have no trades running. However, once you're in that position, let's say you're in a buy with me. As long as we're in a buy and price is going up and our account is blue, you're going to see your equity change. So your equity can go from maybe $1,000 to $1,100 and then $1,200. It's going to go plus and minus, right? However, your balance will still stay the same because you're still in a position that's not completed. So until that trade completes, your balance and your equity will never be the same. But once you're out of that position, let's say you win $500, then your equity will be at $1,500 and then your balance will be at $1,500. So it's really important to have equity in this game. And that's what I'm building with the two positions I entered in twice. That's what I'm building with this. So I have equity working in my favor, which is why I say I don't have to show up to continue to keep trading, it's like a house. If you're in a house, let's say you buy a house, you're an investor and you buy a property, and there's no one living in there, you have to fix it up. Okay, well, you're going to be spending money until it's fixed, right? But then when you put a tenant in the home, you no longer have to be there to oversee it. The tenant will oversee it, and which is why they pay you every single month to live in a property, right? And so as long as they're paying you, as long as they're staying there, you're going to be building equity within that house, because you'll be able to cover the mortgage, whatever expenses, and hopefully you have a profit left. And if you do, that's how you're building equity, right? Until that property is paid for, and then now you're going to be cash flowing, because you have no balance on that property. So it's kind of similar to that with how we're trading. Okay, we're parking our money and we're not having to sit there and wait. Okay, so now with that being said, as you see prices starting to ebb and flow, and anytime you think of ebb and flow, just think of water, just think of waves, right? Think of ripples, right? It's rippling. You don't know when that ripple is going to come. You don't know how the tide is going to affect the current, as it's going forth and back and forth. But it's just extra waves being made as prices going up to your target. And this is where I say, okay, well, here in this small range, in this small area, we had an exchange rate go from 135,911 to 135 or 133,997, and then we got this high right here at 136,656. I said, you know what, I think I'm gonna take advantage of this opportunity. And so I drew my zone out, and the way I draw my zones, you guys, let me be quite transparent here. I don't necessarily look to the left, like, look left, structure these clues. Like, I don't go all the way back to do that, because I want to trade with where price is right now, with what price is giving me. So in my mind, as long as price can stay above this exchange rate, gives me one of my candles. I only look at 4 candles, gives me one of those 4 candles, I'm going to be in that position, because I only look for 3 things. Number 1 is trend. Price is going up. That's my trend. Number 2 is market structure. I draw this zone per the weekly or the daily time frame per my candle. I make these candles my structure. And then number 3 is price action. Once I get my leading candle, I'm in the trade. So I got this rejection candle, doji confirmation candle. All I needed was either the rejection or the confirmation. Boom, I'm in. And my entry candle was the confirmation candle, but the rejection candle gave it away. But I couldn't enter per the rejection candle because it was Friday, and I don't enter my trades on Fridays. So when I saw that confirmation candle after this doji, I was sold, and I ended up buying. And once again, using my handy dandy Fibonacci, because once again, here's how I explain it. I already know I'm looking for price to push past that exchange rate. That's not the issue. If I'm saying price is going to keep going up, I want to trade past that exchange rate. This is trend continuation now, right? Now we're building steps, we're building ladders. If you walk down a step or upstairs, you're not expecting to stop at that one level or that one step you went down. In order to keep going up or down, you need steps that surpass it. And so that's what the Fibonacci, my negative 27, is for. I'm using it to surpass where price just was, so it can keep going up, okay? So boom, negative 27. These are some free gems I'm dropping for you guys too. Okay, these are really, really great gems that I want you to use and take away with you. Okay, so now I'm out of that position, and so that added to my account, and now my trades are just running. And I'll show you guys a picture of the positions that are running right now. And if you follow me on Instagram, or if you're in the Swing Trading Society, my personal coaching group for people who want to learn how to swing trades and hold trades longer, this is something that we went over as well too. But anyways, you guys, I'm on my hands now. Now, if price does retrace, if price does pull back, I will be looking for it to stay above this area. So this zone will delete, a new zone will be made, okay? And once again, market structure, remember the 3 rules: trend, market structure, price action. Now that I've deleted that market structure, we now have to adjust for the new one, because you never keep things in the same place, especially as price is moving. Because when fresh candles print every single day, you want to make sure you're up to date with them. Think about a human being. Every single day, every single week, every single month, every single year, we change, and we need people to adapt to who we are. And if we need people to adapt, that means we need to adapt to who the market is and what the market is showing us as well too. So you guys, that's my pound JPY, and I hope you guys enjoyed this. And if you did, you guys, give it a thumbs up. Make sure you like, comment, and share this video. Help SLFS get to 3,000 subscribers by the end of the year, you guys. And if you like this video, I'll keep doing more, and I'll be updating you guys on a few currency pairs that I am in as well next week, since it is Friday. Okay, so talk to you guys later.